Hey guys, hopefully everyone is doing well. Today's target is to solve question number 16. The chapter which we are related with is company's financial statement, and here you can see the question available is little comfortable for us. Why? Two columns are available, one on left, this is your debit side, one on your right, this is your credit side, and total of both columns available. It means it's complete trial balance. Assets and expenses are present over here. Liabilities and incomes are present over here. So if there is any confusion whether it's an income or expense, whether it's an asset or liability, the confusion would not be no more, would not be there if we will follow accounting principles. Assets and expenses are present over here. Beside this question, we have few adjustments. Relatively, number of adjustments are less than that of number of adjustments which were present in previous question. We do have only 6 adjustments, which means these are the amounts which were supposed to be present in this trial balance. But due to any reason, they were missed and they were not entered in accounting statements. That is why they have written outside. So due to this reason, if any amount present over here is not represented in trial balance, that would have two effects, double effects. Please remember, each of this amount will be written twice in financial statement. Next, you can see we have pro forma on your left side. This is your red line. Left side, there are three parts. This is your first part. It would be used to calculate gross profit. Second part, it would be used to calculate net profit. Then the last third part, it would be used to calculate appropriation balance. And finally, this appropriation balance would be transferred over here in fixed liability. After that, we will take sum of fixed and current liability beside reserve to get total of liability side. This would also represent total of balance sheet. Last, we will go to asset side over here, where all fixed and current asset would be added beside investment. These three sum will create total of asset side, and it would also be equal to total of liabilities, and finally this would represent balance sheet total. So this was your brief introduction, brief view about the question, and I'm very sure that you people are now mentally prepared what we are going to do today, what is our target, and now we are ready to start a question. It was informed if adjustments are present. Several times we have discussed it. If adjustments are present in your question, you will be solving these adjustments as our first step. Although question is starting from here, but you will leave trial balance for a while and will start your question from adjustment. We are ready to begin our question, so let's start. First adjustment. Stock on 31st December 93. This is your last date as it is mentioned in your question. Look at here, 31st December 93. Last date, that means it's a closing stock. Stock on 31st December. So let's go to cost of goods sold statement, where we will represent opening stock, then we will add purchases. After that, we will subtract returns if they are present, then we will subtract closing stock, and we are talking about this amount of closing stock mentioned over here, 580,000. So mention 580,000 in direct expense side, and immediately you will go to current asset side, and here 580,000 in asset side you will also be presenting. It means we have completed our dual effects which we were talking about. First effect in direct side, second effect in asset side. Alright guys, so first adjustment is completed. Now next is provide 20,000 for further taxation. So let's go to appropriation side. over here provision for taxation would be mentioned. Let's see how much amount we may have. That is 20,000. Mention 20,000 in appropriation debit. Now come to current liability side, and here provision for taxation 20,000 would also be presented in current liability side. Guys, you are observing, and I'm sure you people are with me, that each of adjustment was having two effects, and we are doing that. Depreciation written off 31st December 93, land and building, this and that. But look at here, depreciation account is already present, and now we will see how much depreciation total we have in adjustment. So we will start adding these depreciations. First 289 200, then we have 309 300, then we have 7500, after that we have 3500, then we have 14500. Okay, so finally we have 624,000, and look at here, 624,000 is already present, and we know that it's a trial balance. So depreciation is already present in trial balance. It would not be having two effects, only single effect. So one by one we will be doing it in our fixed asset side. So let's see, the first asset present in this adjustment is land and building. So let's write land and building over here, less its depreciation, amount of which is 289 200. Alright, the next asset in adjustment is machinery and plant. And we will subtract its depreciation. Amount of depreciation of machinery and plant 309 300. After machinery we have furniture. Let's represent its depreciation as well. Depreciation of furniture is 7500. Write down 7500 over here. After furniture we have office equipment. And we will subtract its depreciation, and office equipment depreciation is 3500. Put over here. After office equipment, last is motor vehicle, and we will subtract its depreciation, which is 14500. So all assets are presented, their depreciations are written, but please keep it in mind, these depreciation would not be written in operating expense side, as these are not completely an adjustment amount. Collective amount of these depreciations are, look at here, already present in trial balance, so there will be only one effect. Now next, number 4, debit due to company are all unsecured debts rupees 2000 are bad and to be written off. So over to operating expenses, there we will see if bad debts are present, we will add additional bad debts, we will add new provision for bad debts, we will subtract old provision for bad debts. Right now, in adjustment, additional bad debts are discussed and they are 2000. So just write down 2000 in additional bad debts that has been completed. Nothing else was present over here. So first you have written in indirect side. Now let's go to current asset side. Over here, first we will mention sundry debtors and then we will subtract additional bad debts, and these are 2000 mentioned in our question. So two effects, as you can see, that completed, one on operating expense, second in current asset side. Fifth adjustment, director transfer 60,000 to general reserve, so we'll go to appropriation side. Over here, transfer to general reserve, amount of which is 60,000. So as a first step, we will write 60,000 in appropriation debit side. And now let's come to current liability, provision for general reserve, and amount 60,000 would also be mentioned in current liability side. So 60,000 completed. A dividend of rupees 7.5 per share. Dividend is also part of appropriation side. Over here, first we will mention dividend, but we need to calculate, and it is said that 7.5 for each share. Now how many number of shares are present? We'll have to see. At number 6, you can see authorized share capital 10,000 shares. 6,000 shares have been issued and subscribed. We are not related to authorized because it's nominal capital. Actual capital is issued and subscribed. Number of shares are 6,000. So come over here, and we are now in mind that number of shares are 6,000. Each share will have 7.5 as dividend. Let's calculate. Number of shares 6,000, and then each share will get $7.5 or rupees as dividend. So 45,000 dividend, first effect is completed. Now let's come to current liability side, and here dividend, amount of which we have just calculated 45,000. So you can see that dual effects completed, one on appropriation side and secondly on liability side. It means this adjustment is also completed. So guys, you have seen that there were 6 adjustments and last adjustment was only information. Here it has been discussed that we have authorized capital. So just mention authorized capital, and it is said that authorized capital contains 10,000 shares of 100 each. So let's mention it, 10,000 shares of 100 each. Let's see how much amount shares are mentioned, and per share 100 is also mentioned. So authorized capital is written. Beside this, please note it down, 6,000 share issued and paid up are also mentioned. So here issued and paid up capital, and it is said 6,000 shares of 100 each. Let's calculate. Number of share mentioned 6,000. What is 100? Per share price. So issued and paid up capital is also written. Now you can ask question that this share capital was present in adjustment. So where is its second effect? So come over here. Look, share capital 6 lakh. It is already present in trial balance. That is why there will only be one effect, and we have written in liability side. So issued and share capital is also completed. All 6 adjustment with their due double effects, they are also completed. It means we can now focus upon our trial balance. So now our target is to put each and every element present in trial balance to financial statements relevant related parts. First, stock on 1st January, name is clearly mentioned that it's opening stock, its seat is already reserved. Amount of opening stock 290,000. So just put 290,000 over here. After stock we have fuel. This is your direct expense. Come over here. Fuel and power. Amount of fuel is 10,300. We will not be bothering about second effect because trial balance would have only single effect. Salaries and wages. We'll go to operating expense, salaries and wages. Now you can ask question, since wages are direct expense, why we are writing salaries and wages in indirect side? Because wages are also present. In any question you will follow the first word. First word is salary, so you will put it in indirect side. Let's say the word was wages and salaries. So first word wages, you will be putting it in direct side. So now due to salaries mentioned at first hand, so we are putting and recording, posting it in indirect side. Amount of salaries and wages mentioned over here to 17,000. So in operating expenses we are going to write salaries and wages. After that we have purchase, its place is also reserved. Amount is 232,200. 232,200. Alright, purchases we have written. After that, rates and taxes. We are going to indirect side, rates and taxes, amount of which is 7,500. Just mention amount in operating expense side. After rents, we have insurance. Again, indirect side, insurance, and amount is 10,000. So just mention this amount in operating expense side. Repairs and building is next. Again indirect side, repairs of building, amount of repair 3,000. Mention this amount in operating expense side. Then repairs of machinery, same nature with different names. Repair of machinery and its amount is 18,000. Mention this amount in operating expense side. Then we have manager commission. Again in indirect side, manager commission. Amount of manager commission 10,500. Mention this amount in operating expense side. After that, director fee. So here director fee indirect side and its amount is 600. We are writing it in operating expense side. Now nature is getting different. Land and building 475. Land and building is already written 475,000. Next, machinery and plant 350. 350 in fixed asset side. Names are already mentioned. Just we are putting the amount. Machinery. Now furniture 8,500. Here 8,500 furniture we have written in fixed asset side. Office equipment 4,000, mentioning this amount in fixed asset side. Motor vehicle 22,500. Okay. After motor vehicle, we have sundry debtors 290,000. So here 290,000 sundry debtors. Closing stock amount is 580,000. Let's check. Yes. Okay. So sundry debtors 290 mentioned. After sundry debtors, we have prepaid. Prepaid is present in trial balance, so there will be only one effect. Asset side, prepaid expenses. Amount is 27,500, which we will be writing in current asset side, prepaid expense. Let's check it out. Okay, after sundry debtors we have prepaid. Next, cash in hand. Again, cash in hand will go to asset side. Now let's see how much amount of cash in hand is 3250. In current asset side we are writing 3250. After cash in hand we have cash at bank. Again asset side, cash at bank. Amount is 18,350. So in asset side, current asset side, we are writing 18,350. So guys, you have seen that all related items present in left side or debit side of trial balance, they have been completed. We will now turn our focus to right side, that means credit side. The first element is profit loss account. Over appropriation, we will write profit and loss account. Let's see how much amount, that is 5,900. Although pic is little blurry, 5,900. In appropriation credit side, we are mentioning it. Sales, it would be written in direct side. Here let's mention sales. Amount of sale is 365,000. So in direct income side, we have written sale. Share capital 6 lakh, I think already mentioned. Yes, 6 lakh issued and shared capital in fixed liability side. Provision for taxation, and we have a reserve place here. Provision for taxation is written. Amount is 15,000. In reserve side of liability, we are mentioning the amount. Provision for doubtful debts will come to operating expense side, and here old provision is already mentioned. Amount of provision for doubtful debts 6,300. Just write down in operating expenses. General reserve, for that will go to liability side. General reserve, amount of which is 1 lakh. So here in reserve side of liability, general reserve is mentioned. Unclaimed dividend, look at here, present on credit side. Dividends, if present in credit side, it is our income, but now it is unclaimed. Unclaimed means nobody had come to receive it. So for the time being, we will save it in a sense that the owner or the person who can claim can come back. So it's your liability, unclaimed dividend. In current liability, we will go unclaimed dividend would be mentioned. amount of unclaimed dividends 1600. I hope this is the correct amount because picture is little blurry. So in current liability side, we have mentioned unclaimed dividend 1600. After that, we have sundry creditors. Again in current liability, sundry creditors. Now let's see how much. That is 101,000. So in current liability side, we are mentioning sundry creditors, bill payable, again liability side, and amount of bill payable 32,000. We are mentioning this amount in current liability side. Then we have outstanding expenses. They are considered to be adjustment but now present in trial balance. So we are mentioning it only in liability side. So outstanding expense amount is 75,000. Mention this amount in current liability side outstanding. Manager commission outstanding nature is same. So here we will mention manager commission outstanding and we don't have any further placed for current liability side. Commission outstanding 1800. Write down in current liability side. After that we have depreciation and all of the depreciations mentioned over here in fixed asset side. Next, miscellaneous receipt. So we'll go to operating income side and here miscellaneous receipts would be mentioned, amount of which is 25,600. So just write down 25,600 in operating income side. So guys, you have seen that this was your last item in credit side of trial balance, nothing left. Adjustments we have already posted, each and every element on debit side already posted, and now we have completed our credit side. So questions posting is completed. It means we are now open to start our calculation, and these calculation would be started from direct side. Sales returns were not present, so same amount we have written on outer column. Now let's start calculation of first part of cost of goods sold statement, opening stock plus purchases and less closing stock. We'll have to see it again. Purchase amount was 232,200. Okay, so first time, I think second time our cost of goods sold statement is in minus. Fuel and power is 3200, so we can now calculate total cost of goods sold statement where first part of cost of goods sold and second part of cost of goods sold statement is direct expense. Adding this will get grand total of cost of goods sold statement. And finally we are in a position to calculate our gross profit, and it has, let's say, if answer is available. Alright, no answer is available, it means we'll have to go forward blindly. What we have done, 365,000 was amount of sales, just written over here. This is your amount of sales, and then you have subtracted cost of goods sold, and finally we are getting 412,500. There is a problem in understanding because Normally it should not be over here. Minus sign. So cost we are getting is in minus sign. Anyhow, we have followed our rules, and rules are saying our gross profit is 412,500. So we are leaving everything behind. Now let's start calculations of indirect side. First we will complete bad debt adjustment, additional bad debts. We were supposed to add bad debts and new provision. Both are not present, and last step was to subtract old provision. So less old provision. Here we are getting minus sign. Remaining all adjustments, all amounts are ready, which means we can take sum of all operating expense. So it has been completed. Another matter can be shared. We have got this minus. Whenever you have it, there are two options. You may write as we have written over here. And second option, if minus sign you are getting out of provision for bad debts, you take it and write in income side, because it is an excess in provision. So you may write in income side, or you may write minus in expense side. Completed. After that, we have operating income. There is only one, no other expense, so you may write 0. No other income, you may write 0. Now let's start calculation of net profit. We'll go to gross profit first. Here we have gross profit, then you will subtract minus operating expense, then you will add operating income, and as you know, no other expense, no other income, so it's finally we are getting 175,800, which would be considered as our net profit. But we'll have to see if there is anything else. And one more way to write down everything over here so that we can have our final answer. Miscellaneous receipt 25,600 is okay. Then 217 salaries, 7,500 rates, 10,000 insurance, 3,000, 18,000 repairs of building machine. Yes, okay. Manager commission 10,500 is also okay. Director fee 600. Alright, so provision for bad debts is not mentioned over here, and our answer is 175,800. So please note it down. 175,800 is right now present, and 171,500 was expected. So this 4,300, once again we'll have to see what this adjustment was. Debts due to company are all unsecured. Debts of 2,000 are bad and to be written off now. So this 4,300 was supposed to be present over here, and it has not been mentioned in the book. So how we are going to proceed, it depends. Okay, this answer available over here is 17500, while the adjustment related to bad debt has been skipped. Look, in trial balance, provision for doubtful debt 6,300 was also present, and it has been skipped. So we are not skipping it. Let's forward ourselves and see what happens. Okay, now we are at appropriation side. Expenses are ready, no adjustment is present. Let's take sum of all appropriation expenses, and that's what we have got. Let's calculate appropriation balance. For this, net profit, add previous year profit 50,900 and subtract all expenses, all appropriation expenses. So we are getting 101,700, and again the same thing, this 4,300 is ignored, and that's not the good thing. Alright guys, we are over here, and this 2000 was supposed to be subtracted, and that's what we have already done. In asset side, sundry debtors are supposed to be adjusted to 88. Alright, so let's start calculation regarding our asset side. First we have land and building less its depreciation. Then we have machinery less its depreciation. After that, furniture subtract its depreciation. Office equipment less depreciation. Motor vehicle less its depreciation. So no other fixed asset is present. So let's take sum of all fixed assets. That has been completed. After that, we are now focusing upon current asset, debtors less additional bad debts. No other adjustment is present, so we can take sum of all current assets. Once again, I am going to see the total of operating expense how we have taken. Let's confirm. Here we have taken sum of, so it's okay. Alright guys, now we will see this was total of fixed asset. After that, this is total of current asset, and you can see investment was 0, write down, and total of these three we are getting 1153,100. So over here balance sheet total answer is available 1153,100. Now let's focus upon our liability side, and here we will be adding appropriation balance. That's what was 101,700. Let's take sum. Okay, so no other fixed liability. This would be considered total of fixed liability. Then we have our current liabilities. Take sum of all current liabilities. We have got, there are two provisions. We are taking their sum, and finally what we are getting is sum of current liabilities, sum of reserves, and sum of fixed liability. To get grand total of liabilities, we will add all sums present over here, sum of current, fixed liability, and reserve. So we have got 115300, and balance sheet answer is 115300. So guys, you have seen that our balance sheet is equalized, exactly equal to our answer, but here there is a problem. 171,500, instead of that we have 412,500. Okay, this was gross profit. Net profit answer was 171,500. And we have 175,800. Book writer have missed this 4,300, but you will not ignore it. Our balance sheet is exactly equalized to answer given over here. In book, they have skipped this 4,300. I'm requesting you not to skip that. In this way, our question has been completed. Balance sheet is equalized. After that, we can now conclude our question, where we can see 60,000. Okay, where we can see that values are completed. And the only thing which we are waiting for is that the provision which we have made for bad debts. Okay, now please understand what I was saying. This extra provision, there are two methods. You can put this provision over here as a minus sign. Or secondly, look at here, the old provision is excess. You may write this provision on income side. So 4,300 plus sign you can write over here in other income. The third option, you may take this 4,300 to the liability side. In this way, you will be able to complete all of your question with the answer. But right now, I need your time. I will show you the second option. Instead of writing this 4,300, it is very possible to take this 4,300 to the liability side, because this provision is still in hand. So that would be considered a liability for us as well. Why? Because your owner or company had provided you 6,300 as provision, out of which only 2,000 was used. So remaining 4,300 is actually the owner of the business, or the company is basically will own this 4,300. That is why it is liability of the business. So please mentally prepared what we are going to do. We are transferring this 4,300 into liability side. And what would be the magic? You will get same answer which we are now, which now available. 11,5,300 is answer of balance sheet right now. And what we will do, we will transfer this 4,300 into it. So let's start. I'm going to erase it. 4,300 is erased. And now net profit which we have got is 171,500. Over here you can see answer is now matched, 171,500. After that, our appropriation balance, because we have changed it, 171,500. And now appropriation balance is 97,400, which is also matched 97,400. So both answers are matched. As we have said, this extra provision would be transferred to liability side. So come over here, provision for bad debts, and we will call it excess, and that was 4,300. You will be writing over here. Old total would be subtracted. Let's take new sum. And now we will change this appropriation balance. After deleting provision from net profit, our answer for appropriation balance is now 97,400. So just write down 97,400 over here. Alright guys, now you can see your answer is still 11,5,300. 11,5300. Balance sheet side is equal. Our net profit is 171,500. Answer is also 171,500. Appropriation 97,400. And here appropriation 97,400. Balance sheet we have matched. In this way, all three answers are matched. One excellent learning we have in today's lecture, we have solved this question in two ways. First, this minus was present over here. Answer was minus 4,300. When we have put it, same balance sheet answer, and we have skipped it, same balance sheet answer we have got. So these were two ways. If you want to write a minus sign in expense side, you may write. Your balance sheet would not be suffered. Second option was to write it in other income side. Even then your balance sheet was supposed to be equal. Now third option we have opted, minus of provision we have entered in reserve. Even then our balance sheet is still equal. So we have learned multiple options and all are correct. Once again I'm repeating, I am insisting on this sentence, and a very strong decision is required from you. All three options are absolutely correct. So you may write as minus sign in expense, you may write extra provision in income side, or you may write extra provision in liability side. So guys, in this way our question has been completed. All answers are matched and solution you have in front of you. But still, I will repeat the same statement. Viewing a question is something else, but practice of that question is absolutely a different thing. If you want to learn well, practice this question for 3-4 times, and after practicing, if you still feel anything difficult, you are very open to share your problem through messages, text, or you can share your problem through comments. You can directly meet as well. So it's time to end our lecture. Thank you very much for your time, and it's time to say goodbye. Allah Hafiz.